Lost. Out of 23 positions, I lost 20. Not a good start. So anyway, last week. Right. I don't know what I was going to talk about now. Just readjust you a little bit. You've been on charge, the freaking camera ran out of battery, didn't it? For the meantime, I'm just going to walk you through this. You have a trading journal, okay? So I'm not going to go into too much detail because it's going to bore everyone because you already know about it. But for those of you who don't know, we use Notion, which is an app where it does a lot more than just this, but in the Falcon Trading Center, it all comes pre-set up. So when you become part of Falcon, this is all part of your membership as such. You'll get the templates and all the hard work of setting this up is done. So this is where all of my trades are and will end up being as I continue. The first one on my demo account I took was $CAD, and when you fill this in, I don't know how much you can see of this, but the pair, the direction, the entry date, time, stop loss, entry type, so reduced risk or risk entry, high probability, you know, the grade of your entry, if you were watching it, was it in your plan, blah blah blah. Before you enter a trade, you'll set up, if I was going to enter a trade here, this is going to be like a really rough, I'm not saying that I would have taken this trade, but let's say this flag was 3 touches and I thought it was going to continue to, I don't know, let's say, you can see it's going to probably come back down here, so I say probably, that's a guess. Let's just say I thought it was going to come down. So boom, set my entry, 35 pips, let's say 40 pips just to be on the safe side, with potential of making like nearly 2%. It comes to here and then obviously plus more. Just running through, it's very basic. But anyway, you'd take a screenshot at this point, bring it over into your trading journal, apply it in there, and then write your thoughts on, you know, price action moving up to that point, what you see developing and what you think is going to happen. So on this one, this is like I say, $CAD. I decided to use my demo account for the time being. I'd still like to get used to, you know, opening orders. What I meant by this was I didn't want to just give up and come away from the charts completely. So instead of, you know, losing or wasting money, I'd go on my demo account and I can still get involved with the charts. So that's what that means. So I've taken reduced entry after the second touch on this bear flag, set stop loss above the highs. So should we move up for a third touch, we will hopefully be covered. If you look on the daily, price action is below the previous lows and there is a nice ascending 1, 2, 3 structure, and with this flag after an impulse down, and the last one in particular is a heavy bearish candle, possible to continue to the downside. Then afterwards, once the trade has played out, whether you've won or lost or broken even. So here we go. Woke up this morning, still in the trade, and I don't know what to expect with the price action at the moment. Maybe it's coming up for a third touch of where perhaps it's testing the area on the left, and I held out from manual close, sticking to following with the trailing plus 1% stop loss to avoid emotional attachment to my trades. So every time I'd gain a percent, trail my stop loss behind that and keep the 20 pips or whatever I said it was. So say price moves down 1%, move your stop loss behind it, so now you're not in profit because your stop loss will tag you out at break even, but now you're at a break even point, you're not going to lose money. But then as you get to 2%, you follow it down, your stop loss is now sitting at 1%, you see what I mean, and so on and so on. So once you're past the sort of 1-2%, you then know within reason you're making money, or on the demo account. Then another screenshot, what's going on at that point. Then another one, 11:43 in the morning, having a coffee and reading the 1% rule. If you haven't read that book, good, it's a really good book. Check it out. Checked the charts and saw this sitting around 1.5%. We reached 2% mark and came up a touch. Not liking the look of the bullish candles, can't quite tell what price is doing and could easily ping to tag me out at this stage. I'll keep an eye on it over the next few hours and look to re-enter it if the opportunity presents itself. Overall, very happy with the result. Makes a nice change from my losses. So I manually closed because I wasn't sure personally what price action was doing. It started getting a bit choppy, a bit messy, so I've manually closed journal. But that gives you a rough idea. So the next demo trade was Kiwi Yen. Again, filled out all the details, pair, direction, blah 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 blah. This one was on the watch list. I marked it as valid with a reduced risk. This is a bear flag. So before I entered, this is what I wrote. I hope this is interesting. Let me know if this is boring or valid. Just let me know in the comments below. It'd be very helpful for me if you want me to continue doing videos like this. We'll figure it out together. Just altered my stop loss to break even on USDCAD. So the other trade we're talking about. Just altered my stop loss to break even on $CAD and checked this pair. Looks like it's lining up nicely. 15-minute chart, 2 touch on the highs, so possible to break. Now we have the 2 touches. With Falcon, you know that you don't need to have the third touch. Third touch is a higher probability. Second touch is possible to, you know, break to the upside or the downside, depending on which way you're going. But obviously look into other factors, don't just take every flag. I set my entry as a reduced risk purely because it was on a 15-minute chart. I don't usually take 15 minutes, it's not really on my plan, but I saw it and thought I'd take the risk. To reduce the risk, I put it as a reduced risk, if you know what I mean. It's still risky because it's a 15-minute chart, reduced risk. Anyway, it made sense in my head. Not sure if I'm taking this trade on the fact I'm feeling good about locking in the break even on the other pair. However, the flag looks good. We have strong bearish candles on the 15-minute chart, so we shall see. I've just marked on here, managed per 1%, like I was saying, following it down to 1%. Managed 1% and took a manual close at 1.8% profit after it reached 2% and began to push back up. Feel great. Possibly got too early, so there is an element of FOMO in the back of my mind, but overall happy and feel positive of my change in pattern from all the losses to a couple of decent wins. I know they're only 1% or 1.8%, but compared to losing practically 20 in a row, now getting on for 2% per trade is wicked. 1 hour later, I would have been tagged out with another picture. So my gut feeling paid off. So 1.8, close, profit, I'm happy. But that's just me, mate. I'm not sure. I still need to obviously fix some key elements with my mindset, because why am I manual closing? Why am I not just letting the plan play out? That's the whole point of the 1%. Stop loss, should I just wait? You know, these are questions that I ask myself. Why did I close that manually? I know it was the right decision in terms of I managed to get maybe 0.3 or 0.4% extra, but I could have been wrong and it could have carried on. So I need to weigh up why I'm manually closing. And that's like a question I've got for myself. I'll figure that out along the way. So that was trade number 2. So we was doing it right, it was win-win. Feeling good. I think the next one may have been a loss, but let's have a look. July 13th, direction short, CAD Swiss franc, reduced risk, grade valid. It was on my watch list and it was an impulsive move. So this is what I wrote with another little picture. 15-minute 2-touch bear flag. See, I'm sitting on the 15-minute charts. 15-minute 2-touch bear flag formed in the middle of an impulsive move to the downside. No value area close, expected to move down further. About to go to sleep, so could be a tag out as I won't be able to manage it. Risky on that front, feel positive and looks like a good trade. Okay. Picture 1, okay, so I've put multiple photos up here, hopefully I'll be able to share with you. Picture 1, entry at 3 o'clock, and picture 2, modified the stop loss to 0.5% risk. Price developed into a nicer structure whilst I was asleep. This was more of what I was looking for, but I took the riskier version due to the time and risk appetite. I now managed with a trailing stop loss of 0.5% instead of the 1% stop loss. 10 minutes later I was tagged out. So then I'll make a little note here that I felt bad, I was over trading, felt guilty, and note to self here, build up that confidence so that I don't need to take every trade, and missing imperfect entries is perfectly fine. That's what helps protect the capital. There's a difference between someone who is reluctant to enter any trades and someone who carefully analyses to enter on their terms. Study my trading plan and adhere to it. So that's like a note to myself as to how I was feeling and what my key takeaway points were. I obviously was over trading. I felt good about the last 2. I thought I was in a good run, blah blah. See, like a 15-minute, like I say, it looked like it was alright. Should I take it? I'm going to bed. Yeah, let's do it. I'm already winning. So let's just get another win under my belt. There's like a FOMO element to it. Take my time. You know, I'm obviously not someone who's reluctant to get into trades, but someone who's maybe a little bit too eager to get into trades. So got to work on my patience there. But overall, happy with the outcome. I mean, I learned from it. Also put another one here. This game teaches you so much about yourself. Grateful for those humbling moments. If I had not panicked and left my trade as it was, I would still be in. So although it got a little bit choppy, if I hadn't managed that stop loss down 0.5%, feeling should I, you know, I don't want to lose 1%. Let's bring it down to 0.5%. So if I get tagged out, it's only that 0.5. But doing that, I was tagged out. Whereas if I left it, I would have still been in that boundary of my stop loss, and it wouldn't have tagged me out. It would have moved down further, and I would have been at least at break even. So it just comes down to patience and figuring out what you're doing right, what you're doing wrong, and building on it, being 1% better each and every time. And then that brings us on to this week, so that's going to be next week's video. You know, too much rambling. I hope it sort of made sense. When I watch these back, when I edit these and watch these back, and just slowly make adjustments if I'm talking too much or if I need to be clearer. 3 trades, 1 loss, 2 wins. I think that was a profitable week of 2.56%. Let's call it 2.5%. That's decent compared to months and months of loss. So we are stepping in the right direction. Right, I hope you guys enjoyed it. Please let me know what you thought down in the comment section. I'll be happy to answer any questions about, you know, Falcon and what it's like being a beginner. Yeah, hit the subscribe button. Let me know what you think. See you guys in the next one. Cheers, bye.